Hi everyone, today let's talk about the inflation data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So as you probably already know, the inflation data did come in hot and it sent markets down pretty significantly. You can see super core inflation did go up by 4.8% year over year. And super core inflation includes things like services, barbers and plumbers, things more of that nature versus just goods. And that has gone up a lot. We've been seeing the service sector roar back to health, and that is going to take prices higher, at least a little bit. And you can see if concerned Fed Powell there does make sense. So hotter than expected data. And then looking at CPI, core came in at 3.5 versus 3.4 expected. Definitely not good there. And they're saying here, it seems unlikely that the Fed is going to ease monetary policy until something breaks. Due to the higher inflation data, we really haven't seen any good data over the past couple of months, and this iteration was no different, and Supercore getting even worse. And let's take a quick look at the Fed futures to see how they changed. Interestingly, the cut percentage did go up a little bit today. I think that's ridiculous. It definitely shouldn't have. And then looking at the June meeting, you can see current probability up at 83% for June. So very unlikely we're going to see a cut in June. And then July still looking at a pause as the highest percentage. So markets pricing in the first potential cut in September. And if you've been listening to this channel for a while, you would know that September was what I was projecting. I thought that would be the first cut. Previously to the CPI, Fed futures were pointing to 2 cuts by September, but really I thought 1 cut by September was the more likely case, and even that feels a little bit optimistic on the back of this CPI data. And then looking at the November numbers, still holding at 1 cut for November, and then December, it's basically a toss-up between 1 more cut and a pause at that level. So markets pricing in 1 cut for sure, potentially a second cut, which is a significant change from what the Fed has been talking about, 3 cuts for this year. And then we got a bunch of jawboning from Fed officials about potentially seeing 1 to 2 cuts, and then some saying no cuts at all. And markets are now starting to agree with that narrative. Moving over to fear and greed, we got a massive step down back to 54. We had been at this level almost on for April, and now we're all the way down here at 54, almost back to the neutralized level. We'll see how this plays, kind of like this move here back in August, get a slight dip, slight bounce from that level, and then a deeper cut. See how it plays, but right now momentum back into greed, strength in greed, breadth back into greed. That's also a step down. Put call ratio starting to elevate here. Volatility also going higher on the move today. Safe haven demand back into neutral, pretty interesting. And then junk bond demand really hasn't moved. It's been really resilient. You can see one big spike there, and then it moved right back into extreme greed. So pretty interesting. Overall, definitely mixed signals, starting to move a little bit more towards the bearish side. Moving over to seasonality, as you would expect, we did get a step down based on this chart. And going into the 11th, expecting another step down, and then an acceleration into the 12th, into the Friday session. So right now, slightly bearish period, and then that should be the bottom based on this charts. And then we could see bullishness the rest of the month. We'll see how it plays out, but that's what we're looking at now. Moving over to the economic calendar, you can see CPI coming in hot. Core year over year was 3.8, headline number 3.5, month over month 0.4 versus 0.3 expected. So flat on month over month for CPI for core, and then you can see year over year also flat from the previous read. And then you got that headline number stepping up quite dramatically, and then flat for the month over month headline number. So pretty interesting, makes sense. And then for the Fed minutes, we did see that Fed officials were a little bit hesitant about cuts with the current data that we were seeing on inflation. And then you can see that 10-year note auction coming in hot at 4.56. Expect to see yields significantly higher relative to where they were yesterday. And then for tomorrow, don't forget, we still have PPI. With CPI coming in where it came in, obviously you would expect CPI to come in a little bit hot. ECB interest rate decision tomorrow expected to be flat. And then you got Fed balance sheet at the end of the day. And then looking at Friday, if you hold anything overnight, there's really nothing to affect markets. Michigan data coming out at 10 o'clock, and that'll wrap it up for the week. Moving over to Max Pain, you can see stock price at 514, Max Pain at 518. Put call ratio went down quite a bit, down to 1.9. Total options 1.2 million, nothing crazy. 515 is your first put wall. We're a little bit below that. Next one would be around 510. Bottom of the calls would be right in that 509 to 511 area. Call wall at 528, we've been seeing that, and then you have another one here now at 520. So if we see a little bit of a rally back into that zone, you would expect selling. A finish for the week makes sense between these two levels, so that would give you about 0.5% of upside before the end of the week. We'll see how that plays, but nothing beyond that. So moving over to the charts, starting off with the S&Ps here, you can see that massive candle that we got on the CPI data. Came down, almost touched the trend line. You can see it here on the daily chart as well. Momentum bearish, RSI bearish. And then we ended up holding in there pretty well. We almost tested those lows, ended up holding a slightly higher low, rallied into the close, and we're holding pretty much right there after hours. I think PPI could push us down a little bit more, but I think markets are probably expecting the fact that we're going to see PPI come in a little bit hot based on the CPI today. You can see we're down about 20 cents after hours, nothing crazy, about 30 cents or so. Right at the level, 513.27, we're still holding that level, tested it multiple times, want to see that hold if it's going to do it. This looks significantly more bearish on the daily chart now, though. You can see we're well below all the EMAs and SMAs. On the shorter time frames, you can see 9 and 21 and VWAP all is trading above that 517 level, so doesn't look super great, and you can see big volume on the day. Really needed to hold that trend line in here. If not, then you're looking at the 55 all the way down at 506.71. Moving over to the Tasty charts here, you can see on the daily chart we have not hit that ATR stop yet. 34 EMA at 512.72, touched that level. ATR stop just barely below at 511.65. Very, very close to taking out those ATR stops. Obviously volume on the day coming through. Volume weighted MACD still in bearish conditions. 4-hour chart, we did get and close below that 144 EMA, which is at 515.15, and then that lower ATR all the way down at 507.45. Does seem like it's possible that we break to that level, but that second ATR did hold. Second ATR is now at 510.70. Still bearish conditions here. We've been in bearish conditions for a while. Does seem like this could potentially break down further to those lower levels. And then looking at the hourly chart, you can see we hit that lower ATR, bounced sideways, holding that 8 EMA, so still bearish trend, bearish conditions. Hourly ATR stopped resistance at 519.88. Makes sense. 520 was the area we talked about. And then you have that lower ATR right around 511.14. So a couple of zones in there at 511, then 507 makes sense, and then some resistance in that 520 area. Moving over to the Qs, similar thesis, big leg down. Took out the level at 438. We ended up getting above it right at the close, and we're holding above it after hours, so that's interesting. And momentum is rolling to bullish on the hourly chart. Big volume on that last candle of the day as well, pretty interesting. There was really big volume almost throughout the session, but that last candle was quite good. And then you can see on the daily chart, very close to that 55 EMA, that's at 435.90. If that breaks down, there is really nothing below it here in terms of support. So very important that this holds if it's going to do it. Right now it is, and it is back above that level like we talked about, but momentum bearish, RSI bearish, big volume on the session, and we ended up down 0.87 on the day. Not as bad as I would have expected based on that data, but probably because that 55 EMA came in as support. Moving over to the Tasty charts, ATR stop sitting there at 430, and then you got the 55 EMA sitting there at 433.01, so it's a little bit different on this chart. Didn't get that close to it, and you can see sideways chop. Again, big volume, bearish momentum, so continuing to see that. Did get very close to that first lower ATR band at 435.90, right in that same zone. If we push to that second ATR band, that would be about 430.30, and I do think that that is possible. Start to test that ATR, and then we see if we get a change of conditions. And then looking at the 4-hour chart, really no change here from the SPY. You can see we dipped to those lows, didn't quite hit the second ATR, still bearish conditions. Lower ATR band all the way down at 529.50, so right in that same zone that we talked about on the daily ATR stop, and that would correlate pretty heavily with these other lows. Dip into that zone, and then we'll see what happens. You can also see contraction in volatility, so we'll see how that plays. And that first ATR band held pretty well on that 4-hour chart, and then looking at the hourly here, you can see we wicked that upper ATR, big move down, and the hourly ATR stop did roll down here to 433.50, and you can see these upper ATR bands starting to trend down. Similarly, lower ATR bands rolling a little bit, but not as much. Interestingly, the MACD showing a little bit of a bounce. We'll see if that rolls over in tomorrow's session. Then moving over here to the Russell, you can see the Russell was down a lot, 2.64%. Momentum and RSI obviously very bearish. Big volume on the day. Ended up a doji pretty much after the gap down, but we're below the 55, and this is definitely weak here. Do have support at 189.70 and a trend line down just at right at that 197 area, 198 area as well. But structurally, this is broken here now, and the 21 EMA is all the way down at 189.22. So you definitely have to start factoring in those lower levels. And then looking at the 4-hour chart, you can see sideways consolidation below all the EMAs and SMAs. Again, 198.75, very important level. But structurally, again, this has broken. We definitely have a low. It's not lower lower than this previous low from mid-March yet, but if this establishes a lower low, rallies up, establishes a lower high, which you could argue that it kind of already did with this peak and then these lower highs substantially subsequently, and then we start to see some structural down moves, that could indicate some bearish trend. But right now, you could argue still sideways consolidation with some bearish tendencies. And then looking at the Dow here just for a moment, you can see big gap down, pretty much the same thesis. All the structure is broken. Next level of support for me would be 382.20, and then you got the 144 and 200 SMA down at 366.15 and 360.90, so a long way down here for the Dow. It's been a colossal run, and it seems like we're set to move lower. Moving over to the equal-weighted S&Ps, similar thesis here, gap down in doji. It's below the level 164.87, so that level broke. We're below all the short-term EMAs, got the 55 here at 162.64. You can see that big volume day, we talked about it. There was definitely some selling going on. Now we've seen that selling follow through, momentum bearish. And looking at the 4-hour chart, you can see we hit that 144 EMA, critical zone there, 164.30, and then you got the 200 down there at 162.30, so still have a little bit of support on the medium time frames. If those areas break, you can see on the volume profile, it makes sense we would dip down into that 156, 157 area. Moving over to the Mag 7, interestingly here, Mag 7 turned in a positive day, 0.38, so seems like the Mag 7 might be being viewed as a safer asset even in these tougher conditions. So 439.22, so 349.21 area of support. We've tested it a few times, tested it yesterday and today. Continues to hold right at that trend line as resistance. So seems like the Mag 7 still hanging in there. And if this is the defensive play, this might be where you want to be, which looking back makes sense now why the NASDAQ held up so well, even on such a rough reading. Moving over to Apple and Tesla, I just want to highlight how Apple has now broken down below this structure. So 165.71 is your next support. If that level breaks, there is a ton of room. Could absolutely do it. You can see it's a very clear low back from this mid-October area. But like I said, big zone, need it to hold. If it doesn't, 155 could absolutely be within the realm of possibility. I want to highlight Tesla hanging in there really strong on the day, 2.8 to the downside, but that's not super bad for Tesla. And you can see we're still holding a higher low at the trend line, right in that 21 VWAP and 9 EMA zone. So it looks okay. It's right at the highly traded zone. Talked about this being a double bottom. Looks much different from Apple. Apple clearly a lower low at this point and continuing to sell. Tesla hanging in there, and it looks like it could push up to that 55 EMA around 183, 184. Moving over to Amazon and NVIDIA, the two positive players from the Mag 7. So Amazon up 0.15. You can see we touched that 9 EMA and bounced. Still looks strong momentum RSI bullish. Next level 188.61 looks good. And then NVIDIA, it's been on a bit of a downtrend. You can see quite a move here. I started to add some levels in here since it's not just a straight up move anymore. So I added one here at 843.36. You can see that touch low here back on 11 March. Some consolidation there on 5 and 6 March. Now we touched it yesterday, wicked high, and then touched it again today and rallied up. Strong day, 1.97, one of the better days we've seen on NVIDIA over the past couple of weeks. But NVIDIA really putting the Mag 7 on its back, needs that area to hold if it's going to go higher. And if it does, you can see there's quite a bit of room after this down move up to that next trend line. That would put you up around 1,000, which would be a little bit over $100 higher. Moving over to staples and discretionaries, you can see staples hanging in there. Again, another test on that 74. Still down 0.36, but momentum continues to roll to bullish. Volume hanging in there. RSI doesn't look great, but that 74 level continues to be critical support and not too bad. Bouncing off that level again here today. And then discretionary still looks quite weak. Clear double top or lower high, selling off again into today, right at that kind of intermediate support that we had there at that 178.40 area. If that breaks, 174.76, and then you got the 144 and 200 SMAs right in that 171.50 area. To me, at this point, it looks like it's going to break, but Tesla hung in there. So it was only down 1.5%. Moving over to utilities and gold, some of the strongest sectors here recently, both of them down pretty substantially, 1.71 and 0.95 on the day. Makes sense. Yields went higher, so not everyone's looking for those safer sectors. They can start to move into bonds a little bit more. 21 EMA got tested and held at 64.44. VWAP right there as well, 64.38. Critical zone, 64.20. Need that area to hold for this structure to hold up. Momentum bearish, RSI bearish, volume ramping on that down move, so not great. And then finally got a little bit of a leg down here on gold. Gap up, doji, gap down, so that doesn't look good either. That's a bit of an island reversal. We talked about this being extended yesterday. It definitely looks extended. Doesn't mean that this structure is going to break. Could see something like this where you get extended, sideways chop, kind of in between the 9 and 21s. That would put you somewhere around 209, 210, and then end up rallying higher from that level. But right now it does just look a little bit extended. And you can see just how strong this volume has been here. Almost seems like somebody might be selling in this zone. Momentum did roll to bearish, and you can see same as what we saw last time, dip low, slight bearishness, and then we got the continuation. Moving over to breadth, obviously both of these dipped down a lot. We talked about that potentially happening yesterday, and sure enough it did. Hit that resistance on the 50-day average, sold off directly from that level. 20-day breadth, same thing, hit the 200, hit the 144, almost the 9, and then sold off. You can see we're right at these previous lows. Talked about this potentially pushing down to the 16, so that would give you a couple of more days of downside, which fits with the seasonal thesis. And then here for the 50-day breadth, we'll see how this plays, but your next level would be 40 if that 5280 level breaks, and that would put you below all the EMAs and SMAs on the 50-day breadth, which could indicate a little bit faster selling here over the next couple of days. And moving over to yields, as you would suspect, yields went up massive on the day. Huge breakout. We were right at that 4.8 level on the 2-year. Massive breakout, almost back to that 5 level, same level that we were at all the way back in November of last year. So we've almost round tripped that move. Seems like we're probably going to get there on the back of PPI. And then looking at 10-year yields, similarly, hit that 4.35 level, went straight to the next one at 4.55. That's why it's important to watch these levels. You can see it touched that level, went straight to the next one. So super important at that level. If this continues to break here, the next one's all the way at 5, and that was the October low of last year. And then we had that massive run. You can see it correlated very heavily with yields going lower. And now we have the inverse happening. So yields going higher. Markets have hung in there pretty well considering the move so far. But if this continues, I think it's going to affect markets eventually. Moving over to the dollar here on the hourly and the daily, as you would suspect, CPI came in hot and the dollar went much, much higher on the day. We talked about the dollar looking strong. I've been talking about higher lows for a while. We had a bit of a breakdown and now we're at a new high relative to these two previous highs back from February and now the beginning of April. We're also right at this low here from beginning of November of last year. Looks like we're pushing to that 505.5 area. Talked about that for a while. I think it's headed there. If that zone breaks, you have 106.4 above that as trend resistance and then 106.8 as horizontal resistance. That marks the tops here from October of last year. Again, you can see October of last year bottom, dollar going lower, markets going higher. And now we're seeing the inverse of that move. Moving over to JNK and TLT, you can see bonds cratering as you would suspect. JNK massive breakdown, closed below this range. First time that this has happened all the way back here since January. So this is a big breakdown. JNK breaking down from this structure. See where it can go. Got the 144 all the way down at 92.8 and the 200 down at 92.5. That's the zone you're looking for. I have a level at 92.5 as well. So right in this zone makes sense. And then TLT breaking down on massive volume does not look good. Makes sense that it would do it though. Next level 89.16. We've been talking about the structure as bearish. You had a couple of big moves and then they were quickly rejected. Now you have a new lower low. Pretty significantly lower as well. If this zone breaks, then you're looking back to the low from October of 23, which puts you all the way down at 80.60. So we'll see how that plays. But right now, bonds are probably not the place to be, at least in the short term. Once they kind of show some structure and you're looking for yield, they might be somewhere to go. Moving over to volatility, makes sense that bond volatility did go much, much higher. 200 SMA up here at 113 on the bond volatility. And then looking at the VIX, got a leg up, touched that 1470 for just a moment, pushed back to the trend line, rejected from there. Let's go ahead and extend this one out as well. Right in that zone, still touching both of the trends. We'll see how this plays. Right now it still looks a little bit bullish to me, which means we should get a little bit more downside over the next couple of days. Moving over to my accounts, you can see I actually did really well on the day. I was positioned pretty well going into the session. I was very cautious. I thought markets were going to go lower, so based on that, I was positioned quite well. You can see I ended up down only about $60 on the day, so really, really well done for me considering how much these markets were down. 0.87 on the Qs, over 2% on the IWM, rolled that down, and you can see I have a 201 now for 2 days from now for $1.74. A little bit of a profit there, so gives me just short of a 1% opportunity over the next couple of days, and you can see that is down just a little bit, so might roll that down. Definitely watching for an area where we could see some waterfall sell-offs in the IWM. The Russell is more affected by those interest rates going higher, so something to keep in mind if you trade the Russell. And then looking at the Qs hung in there quite well, finished above 438. You had to be careful there. If you held those puts, you would probably be getting assigned. It did slip below 438 after hours, but I ended up rolling that position down to 437 for a $1.60 credit, so giving myself some protection, a little bit over $1, still trying to collect about $300 on that position. And then for my poor man's covered call, that one worked out great. 437 was the covered call, and then I actually ended up rolling that up just a little, 438 for $2.56 credit. So continuing to do very well on that position as we go into the Thursday session. Definitely playing some more defense, but still trying to make a little bit of money here and there. Let me know down in the comments section what you think of inflation and the current Fed futures. When are we going to see a cut, and how are markets going to react? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.